Welcome back to Fast Market. On this Friday morning, I'm Alex Coffey alongside Tom White, filling in for Kevin Hinks. Tom, heat map's got a lot of green. The chart's got a lot of green. Equity's bouncing back here to end the week. What has caught your eyes so far? I know we're only a couple hours into trading. There's still plenty of time here. But are you impressed by this equity market resiliency?
Yeah, a little bit, but I'm not surprised by it. It seems like that buy the dip mentality is still here. It hasn't been broken at all. If you look at some of the RSIs, we talked about this in MetLife, but if you look at some of the RSIs that are just on the major indices like the NASDAQ and the S&P 500, they're getting extended, right? And that's a concern for me as the breadth of this rally is starting to wane a little bit ahead of earnings season next week. So if you're looking at the headline numbers that we're going to see out of earnings season, they're going to look really good, right? Because the comparables to last year's quarter are going to be anywhere from probably 55 to 65% above those levels. So take that into consideration when you're looking at results from some of these companies that are coming out with earnings. But a pretty resilient market right here, but not surprising that they keep buying the dip. There's a lot of liquidity out there. Yeah,
NDX RSI is still in the overbought territory if that's defined by higher than 70 at 73.36. The SPX has slipped back into kind of the neutral range at 66.7, but still very, very strong. But a great transition for us here. Let's talk some earnings. For that, it's time for our cash tag segment. I'd like to welcome in from our newsroom, TD Ameritrade Network contributor Jenny Horn and Landon Swan, the co-founder of LikeFolio.com, joining us from Louisville, Kentucky. Jenny, set us up here because earnings season, I believe, kicks off next week. And, of course, Fast Market, we love earnings season. So much to talk about. But expectations, as Tom talked about, are very, very high.
They are high, and next week sort of kicks off the unofficial start to second quarter earnings, and I have to say that many people, it seems like, are very excited. I know I am, because I think this brings a lot of fun events into the market. But like you said, expectations are super heightened. I mean, lately, investors are fearful of so many things, whether that be inflation, unemployment, or employment, and this Delta variant of COVID, and also some of these China headwinds we've gotten, as well as tech regulations. There is so much sort of fueling this fear in the market. So for that reason, I feel like expectations are high. People are betting on this earnings season actually, making the market go higher. So for that reason, right now we're looking at, what follows a blockbuster first quarter with the second quarter, which saw over a 50% growth rate than this prior quarter. Now, like Tom just mentioned, this quarter, the CFRA is predicting about a 60% growth rate, with levels expected to normalize actually in the third and fourth quarter and so on. So the S&P 500 companies are expected to earn about $48 a share, which is more than double 2020 levels, and also more significantly than that, actually significantly higher than 2019 levels. And so many believe that really these earnings, may not be enough to meet these expectations. All that matters to really signal recovery is guidance. Guidance is going to be, I believe, extremely important in this quarter. So many people are expecting second quarters to sort of signal any degree of economic recovery. So if companies fall short to do so or fail to provide strong enough guidance, I think they will get absolutely, pummeled. So that right there, I think, is important to keep in mind, that results have to be extremely strong, in my opinion. Plus, but with banks kicking things off the next week, what we've seen with banks is their prices have sort of run up in the first half of the year. So again, very heightened expectations. And then we have big tech to follow, there'll be a lot of focus on that. But today on social media, I just searched for more macro trends as far as earnings goes to see, what people are feeling ahead of this, report. And I have to say things are pretty mixed as far as social media, to be expected. So that brings me to our first tweet of the day, which says, analysts have been bumping second quarter estimates at a record clip, and they're still too low. The market knows that. This earnings season needs to be much, much better than expected. So sort of exactly what we're saying. Expectations are very, very high. Now, many actually think this is the perfect opportunity to see this market sort of break out of the range bound that it's been stuck in alongside, bonds, stocks. We're seeing a lot of activity right now that's sort of been stuck. So that brings me to our next tweet, which says, market opinion, relax. Markets typically bumpy before quarterly earnings season. The 10-year yield at 1.33%, looking for 1.5 to 1.75 this year. Market will like second quarter reports and move higher. And I love the disclaimer of PS, just an opinion. The worst thing you can do is act on someone's tweet. I wish more people thought similar to that. But Landon, I know that your data has picks that are more bearish, more bullish. So as far as your earnings winners and losers, what are you seeing in terms of your data?
Yeah, so I'd like to talk about two different companies today, Chegg and Beyond Meat. So first, let's start with the good news. Chegg, CHGG. They provide, online learning tools and assistance for college kids and I believe not just college kids, but also high school. And it's more than just like Cliff Notes and ways to kind of, get the answers to the quiz. They actually help teach people, and they're doing extremely well. So we've got, well, just a side note, we've been bullish on them. We sent out an alert to our LikeFolio members in December. I think the stock's up about 30% since then. I don't like to brag very often, but we have to acknowledge that one. But purchase intent is actually up about 170% year over year, which if you think about it, I mean, that is a very strong number thinking about where things were last year. A lot of people are becoming more used to using online tools for studying. In fact, that just as a trend is up 12% year over year. So doing very well. Their happiness is high. It's about 71%. We don't have a lot of comparisons to compare them to. One company who's private, it's called Quizlet. Their happiness is 64%. So doing very well, and it's not just about selling books. They have, I think, 80% of their revenue comes from subscriptions, and they've got almost 5 million subscribers. So they're doing a lot of things right. And even though their earnings aren't until early August, if we were to put out an earnings call on them today, just based on today's data, you guys know that we have scores from -100 being super bearish to +100 being super bullish. If we did that today, they'd come in at a +85. So very strong numbers out of them. We'll see if that holds up over the next month before earnings. But right now, Chegg is looking very strong.
Well, Landon, I got a kid going to college in this fall, so maybe I'm going to have to look more into this company. But if you take a look at what this company does, and their price to earnings ratio is pretty high here, is this based on more the fact that people are doing this and buying this subscription based on the fact that, hey, these kids got maybe a lost year of education and they're trying to play catch up, and is this just a temporary thing? Are you seeing from your data that, hey, this is going to be long lasting because they're going to keep that subscription?
Yeah, I think it's more the latter. So this is, I think, a learned behavior that was forced on people over the last year. You're going to stay home from school, you're going to school from home, laptops, iPads, all that. And of course, it was not very effective. I think lost year is a great way to put it. But a lot of these people, a lot of these students started to learn in ways that they hadn't done before, and they wanted to do it in the best way possible. And that led them to Chegg. And so I think that they have created their whole new customer base. And, you could argue right place, right time, but they were doing very well before the pandemic. I think that just accelerated their growth and just sort of forced people to look into online learning in ways they hadn't thought before. So, this should be, if you look at this chart, you can see it's very seasonal. And so this should be a low period for them, but it's actually very high. And so if the online, once schools start reopening over the next month or so, if that follows the same pattern, seasonality, this purchase intent number could go through the roof, and that right before earnings could be a very strong number coming in early August.
Okay, so Landon, it pains me to ask this, but I know that your next pick is not so positive. So tell me about Beyond Meat, which I think I'm the anomaly. I'm the only one of us that really likes Beyond Meat.
Yeah, I think you are. I mean, just based on our data, it looks really tough. I mean, really, really tough. So, we actually put out a bearish alert on them in October. The shares are down about 40% since that alert. So again, don't like to brag, but got to acknowledge it. Purchase intent down 53% year over year. It's been cut in half over the last year. I think that when they launched, it was a novelty. We were on the bullish side initially because the purchase intent went through the roof, but it's just been constantly, slowly fading away and fading away. Their happiness is down 10 points year over year, down to 72%. Compare that to one of their competitors, Impossible. They're at 79%, so Beyond Meat is falling on that level as well. Also, I know that they've just introduced this new chicken tenders, and I guess I should use air quotes on the chicken part, but they're introducing that, and we've got this system in-house that identifies when there's a spike in mentions across any company, and we investigate it. It has to have, come over a certain Z-score threshold, a lot of stats going into it. We get tons of those every day. The chicken tenders for Beyond Meat did not register one of those. It should have it. Anytime there's a new product coming out, it always registers some kind of spike. It was a very low mention bump on that. So I think that the enthusiasm just isn't there. I think a lot of that has to do with the fact that plant-based diets are actually falling off as well. If you look at people talking about following a plant-based diet, those mentions are off 30% year over year. So this is a sinking tide, and this is looking to be one of the weaker companies among the group, and the trends are moving against them.
Andy talked to us a little bit last week when we did like a little bit of a meme stock conversation about those features that you have for your subscribers regarding kind of the hype around things, the buzz, if you will. And amazing that all the hype that they tried to, basically create through the, hey, guess what it's going to be, here's how many letters it is, and it wasn't even enough to register on that, just shows that maybe it fell flat. I heard speculation it was going to be lobster, so I guess when it comes out to be chicken tenders, it's just not enough. But Landon, I think that one of the issues that I've always found with this, and I like many, gave it a try during kind of the hype craze of this space, and I have no problem with it, but it's just an alternative. But if it's a premium price, and I'm not, intentionally trying to avoid meat, it's never going to be the choice. And so until they can bring the price point down below what a traditional meat product is, for those who are not just intentionally avoiding meat, isn't that always going to be a hurdle that they just can't overcome?
Yeah, I think so. I mean, it's tough because they've got a lot of competition, not just for the fake meat or the plant-based meat, but just the lifestyle in general. You don't have to, if you're into plant-based food and you don't want to eat meat, you don't have to buy something that is appearing or pretends to be meat. You can eat other things. You can eat natural, fruits and vegetables and all that. So I think there's a lot of competition there. I would like to hear Jenny's take on it since she's more into this diet. But before we do, I just want to note on that negative 100 to positive 100 scale, if they were reporting today, which they're not, they've got about a month before they report, their score would come in at negative 78. So very, very weak numbers out of them. But yeah, Alex, to your point, I want to hear what Jenny's got to say about the price point and all that. So take it away, Jenny.
My only takeaway of this is that I've got to start tweeting more about plant-based diets, because apparently the trend is falling apart. I got to stick up for the plant-based people.
Yeah, hey, it's a niche, and we'll see if it can continue to grow. It had the opportunity, Landon, when this was in the kind of the news. This was everything. Beyond Meat was everywhere. Impossible Foods was everywhere. But the adoption, the consistent stickiness just wasn't there. So as we kind of wrap things together here, of course, Chegg, positive, looking very strong, kind of a seasonal counter trend. We have schools on the horizon, and maybe this is one that, investors are overlooking for all of those reasons as well. At what point for either one of these companies are we far along enough in the quarter for you guys to be like, all right, this is time to consider pulling this trigger? Because as you said, earnings not until, August or so. We got some of this stuff about the, schools restarting. Beyond Meat, I mean, this divergence is pretty big, so maybe you're thinking about it now. Last thoughts here before we say goodbye.
Yeah, I think it's trigger worthy on both of them, frankly. Chegg's looking very strong. We've been bullish on it for months now, and the fact that it should be low now and it almost looks like a high, that's the definition of a higher low. Looks very strong. Beyond Meat, same thing. I would maybe want to see how these chicken tenders turn out upon launch, but just based on initial reaction, it looks like it's going to be weak.
Good stuff, Landon Swan. Have a fabulous weekend. We'll catch up next week, and maybe Landon will get some Beyond Meat chicken tenders when they launch, and he'll give us his review as well. Jenny Horn, thank you as well. Have a great weekend.